crude oil is down a lot this week. So is it going to collapse all the way down to 50s and 40s per barrel, or is it giving us some sort of a low this week or the next? Let's have a look at the details, and welcome to myfinanceteacher.org, where I have warned the members all the way through this sideways chop that while there was a small chance of a very short cycle finishing in mid-December, hence while I did want to have a bit of a foot in the door, I have held a relatively small position in crude oil all through this sideways chop. I had also warned the members that I was still expecting a more discernible, a more recognizable cycle low for crude oil, which we are possibly observing right now. So before switching to the daily chart, the weekly technicals show us that price bounced exactly from that 200-day moving average, which might actually provide a relatively strong support in the longer term. So there is a pretty good chance that we saw the low yesterday on crude oil. Although on the other hand, there is also a pretty good chance that crude oil continues down for perhaps just another few days. A likely target for such a scenario is $62 to $63. That's the level that has been respected a couple of times in the second half of 2021, and that's also the level of the top before that pandemic drop. And that pandemic drop, when the futures were negative and the spot price was well below $20, is perhaps going to be our generational bottom for crude oil. And if you throw in these Fibonacci retracement numbers, you see that crude has already sliced through the 50% retracement. And as I mentioned many times in my previous videos, 38, 50 and 62% retracement are the most common ones to be respected. So if crude oil continues lower from here, the first target is around $62 to $63, as I've just mentioned. Another target is around $60, close to that 62% retracement. But in either case, whether we've seen the low yesterday or is going to take place perhaps over the next few days, gradually accumulating around these lows right now is not a terrible idea. In fact, as the model portfolio here shows for the members at myfinanceteacher.org, while I had been holding a relatively small position in energy all through the sideways chop to have a foot through the door, I did increase that position yesterday near these lows. That would be positions both in crude oil itself as well as the producers. Again, for more details, join us at myfinanceteacher.org. It's just $10 per month. Looking at the daily technicals, we see that Bollinger Bands are expanding. They're not extremely wide, but they're already pretty wide, and we have a couple of pokes below these bands. As I often mention in my videos, multiple pokes below relatively wide Bollinger Bands are often a sign of a turnaround in momentum from a downtrend to an uptrend. The 14-day RSI dipped into oversold area yesterday, and that was actually the most oversold it has been all the way since late November 2021. So that's for over a year. So again, while crude oil might continue lower for a short while, there is also a pretty good chance we've seen the low yesterday, and again gradual accumulation near these possible cycle lows soon perhaps isn't a terrible idea at all. And talking about this cycle, the cycle has been going on for 170 days if we saw the low yesterday, which is close enough to the average duration, which has been 160 days since the middle of 2017. But if you go back historically, these cycles do last for around a half a year or so. Sometimes they can stretch up to 233 days. That's been the longest one, again, since the middle of 2017. So if this cycle stretches a little bit, continuing down into that cycle low, again, we might see low 60s, $62, $63 would be the first target. And if that's broken, the next target would be the $60, 62% Fibonacci retracement from that generational bottom to the top at $127. So in terms of cycle duration, we are pretty close to an average duration right now. When you're looking at cycles, it's also important to look at market sentiment, because that's what provides the fundamental reason for these cycles. Everybody is just despondent, everybody is just desperate at cycle lows, they want to get out of whatever they have. That's when the market sentiment is down at the floor level. And at the cycle tops, when the price is just about ready to turn around in momentum from an uptrend to a downtrend, that's when everybody is excited. That's when everybody is experiencing that FOMO, the fear of missing out. So looking at market sentiment is important when talking about these cycles. And the market sentiment has dropped all the way down to 31. That's pretty close to this green line, which has usually indicated a pretty good buying opportunity. So looking at this longer term view over the last 14 years or more, it's not that often when this market optimism dropped all the way below 30. Yes, it happened over here in 2015 and 2016. That was the end of that previous commodities bear market. If you remember, all through 2014, 15, 16, we heard talks of oil glut, dropping the oil prices all the way down to under $30. There was one more time when this optimism index dropped down to low 20s in late 2018. And of course, with the pandemic low, when the futures price was negative, we saw this market sentiment below 30 as well, and even slightly below 20. But generally speaking, when you see this market sentiment close to the level of 30, that's usually a good buying opportunity. Next, let's have a look at seasonality for crude oil. Again, since the beginning of 2015, the end of that previous commodity bear market. And we see that usually into mid-March, crude oil does dip significantly. And while yes, there might be another dip into mid to late April, generally over the next few months, crude oil is expected to go higher according to seasonality as well, which does align with our expectation of rising into the advancing phase of a new cycle. And actually looking at this, if you remove the 2020, this exceptional year of pandemic, when the futures on crude oil became negative in April, by the way, you see that generally after a dip in mid-March, crude oil often does start its advance into a new cycle, with the cycles again usually lasting for just under half a year or so. So after holding a relatively small position just to have some foot in the door all throughout this sideways chop, yesterday I added a little more without making a post, but all my trades are shown in the model portfolio for the members at myfinancesteacher.org. So for much more details, join us. Let's have a look together at a range of assets, including precious metals, energy, which includes uranium and those regular monthly uranium reports as well. There's a whole wealth of information there. We also look at the general stock market, cryptos, and some other interesting commodities. And beyond that, we have an exciting quest for some of the most promising potential at a junior level in precious metals, as well as other minerals at the level of developers and explorers. We have a few examples over here, all very, very exciting. Again, you want to have a look at some fundamental valuation, as those junior companies can be quite risky, but if you expect precious metals to push higher while banks are collapsing all over, these junior companies are going to have a huge torque versus those precious metals and other minerals as well. So lastly, coming back to the weekly chart, do you think next week crude oil is going to break below this 200-week moving average? Let me know down in the comments below. And of course, remember to hit that like button and share this video with your friends. Have a nice day. Bye bye.